Good morning, everybody, and this is your DAX setups for today. So yesterday I was expecting us to get moving, but we kind of, there's probably some kind of parallel diagonal somewhere along the lines where the algorithms are trading off, and that's why we have this setup here. I really was expecting us to get moving. It was looking promising in the morning until late session. It's sort of pulling back. So still no opportunity to jump in, but I would start looking left and putting my levels in, and we'll do it this way. And there's one more pin bar that we need to pull in, which is this pin bar over here. So looking at these levels, 18,423, 18,390 and 18,363. So those are the levels we need to pay attention to. Right, so let's just look at some logic from last week. Decent breakthrough structure. We did break out of this range, and the top of this range was at 18,363. Haven't really come back to test it, but we did break through. We had some public holidays in between, just July the 4th celebrations, long weekends, etc. And it kind of put us into a big up, big down at the end of the week. Now we've continued that for today, but there are buyers coming in here, and there is a fairly decent bit of structure right here where price is at the moment, and that's at 18,465. So could be decent move up. Doesn't look like a flag, it just looks like a triangle, to be honest. We just do this. There's no fractal there for me at the moment, but that would typically be what that consolidation is. You'll probably see something more in the 3 hour. And yeah, you can see 1, 2, 3, 4, 5 touches along that bottom line. So I'm just going to ignore that for now, because this to me is a consolidation of sorts. Now, looking at my oscillators in the 3 hour, look how we've separated. We are above the 150 EMA at the moment, and I'm going to treat this as bottom of range right now. So we did range for almost 2.5 weeks here. We've broken up above the range, and now we're back into the range. So you could argue that this is the top of the previous range at 18,465, but I think for me, this area at 18,390 and 18,400 is probably the round number that the algos are busy trading. So we are heading into earnings season, start of the new quarter. So we're probably waiting for a couple of things, right? So there's political noise across Europe with multiple elections underway. Then you have economic data that we're waiting for, begging governments for an interest rate cut, and then you have earnings season. So you've got three catalysts that could drive markets in any direction right now. For me, I think the trend from last week is what you're looking for. It was really just Friday, which was big up and big down, and as you can see, Friday is big up, big down, and then we did exactly the same thing yesterday. So looking at this yesterday, the opening, it was a fairly decent move to the upside. Would have expected let's put the level in, would have expected a buying opportunity to happen here at 18,500, and that did not materialize. So we need to stay above the 150 EMA here on the hour, but I think the better way of doing this is to drop down to the 15-minute and pay attention to what's going on. So yesterday was below the moving averages, then above the moving averages, then below the moving averages, then into the moving averages, now below the moving averages. So ideally, what we're looking for is a break above 18,514. So we need to get back above 18,500 for the longs to continue, and then I would leave this diagonal in. So you're probably looking at around 18,600 as your target to the upside. So that's a fairly decent 100 points, sorry. Alternatively, what's going to happen is we're probably just going to keep going sideways here, and we are probably be looking for one of these levels lower down, and that is 18423, 18400, 18390, and 18363. So nothing in concrete just yet. I think for longs, I definitely want to be trading the break of 18500. Break and retest of that, then that would get me long. But at the moment, I'd be a little bit cautious because we do have a bit of a crossover on the moving averages. So typically you don't want to be trading that. And you can see the logic in that thought process. Whenever you are above the moving averages, you can see, and they're pointing up quite strongly like this, you will typically have a fairly decent trend. And the bigger trend is to the upside. If you look at this scenario here, we have a crossover of the moving averages there, and you can see how we pull back onto structure and then accelerate to the upside. So I'd be a bit cautious of trying to go long at the moment, but I'm also very cautious of shorts, just looking at what's happened the last 3 days. So you can see Thursday was pretty much flat, July the 4th. Public holiday, then Friday big up, big down, wild swings, and then again more wild swings. So I think the wise decision is just to continue being patient at the moment. The S&P does have an opportunity for a trade to the upside, but this is looking like the Dow, which is complete confusion at the moment, no real structure. But I do suspect there's a lot of support below. Let's do this. There's a lot of support below. I do suspect we're probably going to pick up something and then look for a move to the upside. Could even just form a wider flag or channel. So in other words, there's nothing in play yet, but something along the lines of that. So price coming back into this area, finding support, and then bouncing around until we break through and then start moving up, which should give us a move of around 600 points to the upside. Okay, so my advice this morning is just sit tight, wait for a better structure at the moment. Alternatively, if we do get above 18,500, and there's a lot of data and multiple other catalysts in the market at the moment, so there's very strong possibility of that. Get above 18,500, come back and test it, then you've definitely got an opportunity up to the top of this trend line. 100-point trade, but 100 points pays the bills. Okay, anyway, that's kind of my view for today. Hope it helps, and we'll catch up with you tomorrow morning. Cheers for now.